Hey, how you guys doing? It's your boy King Cash coming back at you again with a new video. Today we're gonna start a different type of video. We're gonna start focusing on the structure and tips and tricks and strategies. And if you click that video looking for, the first thing I'm gonna tell you is the easiest strategy to win in Forex, and you're expecting me to throw a couple of indicators on the screen and tell you if you see that line, if you see the 50 EMA and RSI as 30 and Kentucky Fried Chicken stock is at 24, and your mom is mad at your dad, and your car wash drive-through got blown up, then enter. That's bullshit. Well, there's no such a thing as indicators. Waste of time. Most of them you can use them as for confirmation, but actually using them to analyze, then you into a very nice ride called blowing accounts. So that's why today we're gonna go through the best strategy that can make you start being an actual trader. And being profitable or not is not up to the strategy, is up to you, because you choose how to risk manage your trades, and you choose if to follow the strategy or not. How many times I sat with people and I told them about don't do that and don't do that and do that, and at the end of the day, if they don't follow their strategy and the strategies that you come up with yourself, then you're gone, you're done, and then you blame it on the market and oh, they took my money. No, you lost your money, you gave up your money, you didn't take your profits. So if you want to know every single step, we're gonna break them to 5 basically, or 6, I didn't count them, on how to become the actual strategy, the lifestyle or the concept of trading itself. Then first, if you didn't hit the like button, subscribe, leave a comment, join our Telegram group. We're up to 24 people. There's 22 people, there's almost 50. Okay, there's 24 people, sorry, and there's 26 people left into the group for free lifetime when we moved into our Discord group. Anyways, let's get to the video. I'm gonna talk here. I'm gonna start putting pictures in front of the screen. Then the next videos we'll start getting into details into these topics one by one, but we're gonna start each topic and see what we can do. Let's get it. So number one, and I know so many people talked about this, but you guys don't listen, it's risk management. So what I mean by risk management is two things: lot size and how much are you willing to lose to win. If you go into a trade, it's very simple. I'm not gonna get into details right now, but I'm gonna tell you the simple concept. If I get into a trade and I see the trade is I'm going to lose $20 to make $10, wrong trade, don't enter. If I get into a trade and I do my analysis and I see that I'm willing to lose $10 to make $20, yes, good trade. If I can make $10 to $30, wow, amazing trade. So that's how you risk manage. And how much are you willing to lose in return? How much are you willing to give? How much are you willing to give up to make that profit? So don't be surprised when you go into a 0.5 ratio. For example, like you're losing 20 to make 5 pips. That's dumb. Never do that. So that's number one. Lot size is very simple. You don't care about what is lot size. Think about lot size is like how much I'm willing to lose. So if I'm doing a 1 to 2 ratio trade, so for example, if I have a $100 account and I'm gonna see $100 on account, so 0.01, that means to lose the 5%, which is like $5 is giving up 50 pips, then give up 50 pips and use 0.01. If you have a $1,000 account and that 10 pips is gonna be 100, you want to lose $100, which is 10%, whatever. So use 0.1. So lot sizes, it's not really anything. How to choose lot size is based on how much are you willing to lose in return, how much are you going to make. That is risk management. Number two, which is technical analysis. I don't like the term technical analysis. I like just to break them down into different things. Number one is breakdown analysis. So basically is you don't go into 5 minutes and just get into a trade. You might win. You know what? In Forex you might win because it's just a 50-50 thing right here, but it's not right. What you do is you do a top bottom analysis. So you start with the daily, you understand the trend, then you move into the 4 hours, then you start drawing your trend lines. How important, I cannot tell you how important are trend lines. Trend lines are basically support and resistance that move with the graph. They're not fixed, they're dynamic, they're not static, they're dynamic, they move with the graph. So basically when you see more than one point diagonally that is hitting from top and bottom, you start drawing your trend line, and there's trends inside the trends. And that's what's taking us to the next point. So after you go to the 4 hours, you hit your trend lines, you draw your trend lines, you know where's the trend at, then you hit your support and resistance. You need to understand how important are support and resistance, and understand the difference between a higher time frame support and resistance and a lower time frame support and resistance. And it's very simple: is the higher the time frame support and resistance, the stronger it is. So basically, so the first step, we draw the trend lines on 4 hours. We do support and resistance, and then we're done with our analysis. For the first part of our analysis, we move into our number 2. So why do we call it breakdown analysis? Because if we did the 4 hours, then you move down to the 30 minutes, 15 minutes, and you do the same thing. I move to the 15 minutes, draw my trend line, draw my support and resistance. I move to the 5 minutes and do my support, trend line and resistance to do my entries. Always enter on the 5 minutes to get exact and nice entries, and also can see where is exactly it's resisting, because a 1 hour candle you will not see how, like, where is exactly reflecting or getting rejection, so you can enter your trade. Number 3, candlesticks analysis or patterns. There's a lot of patterns for the candlesticks, and most of them are accurate because everyone is using them and they make sense because they happen. So basically, it's just analysis of people been watching this stocks and candles for years, and they've seen these things happen over and over, and every time it happens, it leads into different type of results. You got like W shape, the W, the M. Basically, it's a double bottom, so it means that you have 2 supports. That's a W. If you have a double top, that's an M. There's different type of patterns. Just print them out, put them on your wall, and just don't bother them. But you can see them to help you predict your analysis. But don't build your analysis on them. I see people go on the chart, be like, "Where's the W? Where's an M? Where's the W? Where's the M?" Man, shut up. No, just don't do that. All you gotta do is use them if you see them to support your entry. Number 4, structure is key. And what do I mean by structure? Is high and low. The price goes up, makes a high, goes down, makes a low. If it goes higher, then it makes a higher high. Then it goes down, it makes a higher low. That means we are going into an uptrend. So let's stay in the opposite direction, because people get confused and it's easy. So if I'm going down, so I made a low, I went up, I made a low, I made a high, then I made a lower high, then a higher low, a lower high, then a lower low, a higher low. And then if you have a lower high, a higher low, then you're a downtrend. If you have a higher high, a lower low, then you are in an uptrend. So basically, you have to understand structure. The structure is everything. So basically, if you put these things together, risk management, trend line on the 4 hours and the 15 minutes, support and resistance on both higher time frame, lower time frame, structure, higher high, lower lows, you're set. What else do you need? You don't need indicators for anything. You don't need no strategy. This is the only ultimate perfect 100% strategy that can help. The outcome of that is it's all based on you. Don't blame anyone in trading. It's all up to you. You're the one that put that lot size. You're the one that don't have the time and the effort and the passion to wait and hit that target, and it's all your fault. So control yourself. Meditate. Don't over leverage. Don't put higher lot size. Think long term. Cancel the noise. Join the Telegram group with people that actually support you with real trades. Nonsense. I lose trade. I just lost a trade today in gold. So what? It happens. No problem. No one will win all the time. But all what matters is that I risk managed. I had a nice win to loss ratio, and that's all what matters. If I can keep hitting that consistent, I'm profitable on long term. Think long term. Stop watching Instagram and TikTok videos. Stop entering thousands of groups. Just choose one group you like it, stick to them, and just build friendship and group and trade as a group and a team, and have the spirit up high. When you lose, you will make it tomorrow. If you lose tomorrow, then you'll make it the day after tomorrow. When you're using the right risk management. Anyways, I'm not gonna make this any longer. If you like the video, please share this video with everybody that is wanted to trade and want the reality of trading. It's your boy Ken Cash coming back at you again. I'll see you again. Catch you later. Take care. Peace.